What's up, everyone? Good morning. What's up? What's up? Hope you guys are doing well. Today is Tuesday, March the 17th. Finally back at my home setup. No face cam for today, but we should be back and all set. So hopefully you guys are doing well. Hope you guys are trading well. It is a Tuesday today. We do have some red folder news, of course, tomorrow, which is going to be FOMC. That is going to be the big news driver, at least for this week. Overall markets, the last 3 days kind of stuck in between this range. We end up pushing up and towards our previous day highs yesterday. A little bit of rejection on both the SPY and Qs. So really not too much of a big move yesterday, but we'll kind of talk about what to expect coming into market open here today. Before we do that, what's up, everyone? Good morning. Hope you guys are doing well. My voice is a little bit sore this morning, but hopefully I'm not too sick after coming back from Texas. What's up, Marcus? Good morning, TW. Good morning, Martin. B Roots, Victor. Good morning, Cody, Andy, Maria. Big up. Good morning, Cinna, Detecto, Gerald, Robert, Deuce, Kendra, Hosa, J-Tan, Cosmic, Knight. Good morning, Kendra. Reveth, good morning, Benny, Graham, what's up, Ann, up and down, Ryan, yeah, what's up, everyone? Good morning, hope you guys are doing well. First things first, let's pull up the economic calendar. Yeah, we should be back. Can you guys hear me and see my screen? I love how the first stream instantly the stream gets disconnected, but we should be good here. What's up, everyone? Good morning. Okay, let's get right into exactly what I'm looking for coming to today. Let's pull up the economic calendar here as well. Yeah, if you guys do have any issues, of course, with this stream, you guys can reset it and you guys should be all set. Okay, so as for the red folder news coming into this week, the main thing, as I mentioned here, is going to be FOMC. That is tomorrow. We also do have core PPI as well. So 8:30 a.m. Eastern Standard Time. You have core PPI right in the morning, followed up by FOMC statement, which is going to be at 2 p.m. Eastern Standard Time. And then we also have Jerome Powell speaking, which is going to be at 2:30 p.m. Eastern Standard Time. So, as I mentioned, this is going to be fairly important. I don't expect too big of a move in the overall markets until we do have some more guidance with FOMC. This is going to be fairly big. We'll kind of touch up on this a little bit more tomorrow, but this is what we have. So don't expect, as I mentioned, too big of moves to happen pre-FOMC. Majority of the times, the biggest moves usually happen after FOMC. So let's head on to the charts here now as well. I actually also ended up zooming this trading view in. I didn't realize on my main setup, this was, right, it was kind of zoomed out. So I guess this is much better. You guys can probably see the levels a lot better here as well if I have this zoomed in. But let me know if this is, right, a good kind of area. I guess this is the default setting, so I guess you guys couldn't really see the levels and candles as much, but if I have this zoomed in here, it should be a lot better. But let me know in the chat if you guys can see this a lot better with this being zoomed in. Yeah, because I was on my I forget what I was on. I was on my travel setup, and I think the MacBook has it kind of zoomed in on the stream, and you guys were like, oh, I can see the levels a lot better, and I was like, oh, I didn't realize on my home setup you guys couldn't really see it that well. Zoomed in, much better. Zoomed in, okay. Rollover day also, yeah, we do have quad witching as well. Do you think SNDK? Yeah, we'll kind of talk about all these charts here. We have quad witching this week. We have FOMC, so a bunch of red folder news events coming in as well. But let's go right into the charts to see exactly what we're looking for coming to market open. So let's mark out a couple levels here. Now we can mark out that previous day highs, drag this one over. Let's just actually first start off on the major indices, which is going to be the SPY and Qs. So first things first, as you can see here for the Qs, we're really just kind of right at the bottom of the range. So if we zoom out here on the daily time frame, recently broke underneath key levels, which happens to be our 677.50. As you can see, once we broke underneath this, came all the way back down in towards our 662. Now the past few sessions, we've really just had a key level, which happens to be that 670. So 670, which is our previous day highs, is now being used as a key resistance level. So you can see we have multiple touches here, 672 bouncing off that level. And then we also have the low of the range, which happens to be our 662. So coming into today, as you can see, we do have multiple touches off this general area. We can just drag this over along with the bottom of the range, which happens to be our 662. If you do want to see some upside coming into market open, we have a gap that we've created last week on Wednesday. If you do want to see a push towards the upside, we need to see that break above our previous day highs, hold above that level for any sort of push back towards the upside. You can see yesterday, we kind of talked about a scenario. Most likely we're going to get that pop and fade coming into market open, right? Opening up in the middle of the range, gravitating up and towards a key resistance level. The fade was very much well in play. So for the SPY coming to market open here, right, if you do want to see some upside, break above this 672, hold above this level for continuation towards the upside. Another possible scenario here is going to be the bounce play off our previous day lows. Off the 667, you can see buyers stepping in, potential push back up and towards this 672. So this is what we have for the SPY coming into market open. The pop and fade is very much still in play here as well. If we want to see some shorts, right, rejection here off the exact same spot that we had yesterday, 672. As you can see, multiple touches yesterday, multiple touches here on Friday of last week and Thursday. So we can be looking for short still off this 672 for continuation lower. Or now we'd be looking for the break underneath our previous day lows, hold underneath this 667 for this push down in towards our gap that we created here over the weekend, which is our 663. So these are going to be the key levels coming to market open, previous day lows along with our previous day highs. We do actually have two gaps here on the charts. As you can see, we have a gap that we created here last Wednesday, plus we have a gap up yesterday. So as I mentioned, just mark out that previous day lows, mark out that previous day highs. If you do want to break above, hold, we can see that full gap fill towards the upside or the break underneath. We can see this mean reversion back towards the downside. So let's keep an eye out, as I mentioned, off the previous day highs and the previous day lows coming into market open. I also wouldn't be surprised if we kind of consolidate a little bit more pre-FOMC, as I mentioned. So we do have FOMC, which is going to be the main news driver tomorrow. We have a bunch of imbalances here in the market. So we'll keep an eye on the reaction that we have off key levels coming into today. I do expect a bigger move after tomorrow, which is of course FOMC, but we could see a potential gap fill to either side on the overall indices here. So that's what we have for the SPY and Qs coming into market open here. Now let's go on to the ES. As for the ES, exact same thesis as for the actual levels in itself. What I have marked out here is our 6780 along with our 6720 coming into today. If you do want to see some upside here, break above, as I mentioned, above your previous day highs, hold for that continued push towards the upside. If you do want to see any sort of buyers off our previous day lows, this is very much well in play here as well, off our 6720 coming into market open. So this is what we have for the ES coming into today. If you do want to see some downside, it is going to be off our previous day highs. We can be looking for that pop and fade for that continuation lower, or of course now underneath our previous day lows, 6730 and a hold underneath is in play for this pushback down in towards our 6700 and below. All right, so that's what we have for the ES and the SPY coming into today. Now let's head on to the QQQ. So as you can see here for the Qs, we're still inside of this range here on the daily time frame. So until we can break outside this range, I know we've been talking about this for quite some time here. For about the past couple of weeks, we've been mentioning, oh, if we can get this range break, we'll see some nice price action. But overall, as you can see, at least for this month so far, really month of March, the price action has just been stuck inside of this range between our 616 along with our 596, as for the whole of February here as well, right? Stuck inside this range here. So for the Qs, key levels that we have marked out 596 along with that 616. Until we can break outside this range, we're just going to be a little bit more cautious here on the overall markets. As I mentioned, right, just look for more mean reversions and reversals, right? Continuation is not really in play as much, especially with the Qs, right? Just kind of bouncing off key levels of support here. So for the Qs, what I have here on the hourly chart, you can see a lot more consolidation here as well. Buyers are just kind of stepping in off the low of the range here. So at least for today, the key levels that I am going to have marked out is of course going to be our previous day highs. We can also now have marked out your previous day lows here as well, 599. So coming into market open, let's just have this level marked out 603 along with our previous day lows 599. If we do want to see some upside coming into market open, bounce play here off our 699, sorry, 599 is in play for a push back up in towards that previous day highs. Another possible scenario here, break above previous day highs, hold above our 603. We can see this potential push back towards the upside, which we do have a gap fill, as I mentioned, all the way back from Wednesday of last week. So this is what we have for some upside coming to market open. Very similar thing, very similar thesis along with the SPY. If we do want to see some downside here, potential pop and fade off our 603 here is in play. Off that previous day highs, or now shorts are in play here underneath our previous day lows, 599. I am fairly neutral here coming into today, pre FOMC on both the SPY and the Qs. So we can just be looking for the reaction that we have off key levels. Don't come into the markets with a hard bias. I keep talking about that, right? This is not the markets to have a hard bias. Hard bias meaning coming to the market, leaning heavily in one direction. You really want to come into the markets with a soft bias and be open to playing both sides, right? Because a lot of times intraday price action is fairly neutral. There's not really a clear direction. There's a lot more intraday reversals, right? Mean reversions. So just come into the markets with a soft bias and be open and playing both sides. Okay. With that being said, let's go on to the NQ here, and then we'll head on to some tech names here in a second. But as for the NQ, the key levels that we do have marked out coming into market open is just going to be our 25,000, which happens to be our previous day highs. And we also have our previous day lows marked out, which is our 24,750. So that's what we have coming to market open here. If we do want to see some continuation higher, bounce play here off our 24,750 for continuation, or of course now above our previous day highs, 25,000 hold for a push up and towards our last week's highs. So these are the two long scenarios that I do have on the major indices. Currently, we're kind of just right back in between this general range. So for the Qs, we want to be a little bit more cautious coming to market open. Potential pop and fade is in play here once again, or now shorts underneath previous day lows for that continued pushback towards the downside here. So as I mentioned, fairly neutral on the SPY and Qs coming to market open. Let's just wait for the reaction that we have within the first 5 to 15 minutes. And then based off that, we'll then look for a potential continuation higher above our previous day highs or below our previous day lows, or that rejection for that continuation right back towards the downside. Okay, now I'm going to head on to the SMH and then we'll head on to some tech names here. So if you guys do have any charts or any tickers, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below here as well. All right, let me grab some water here and then we'll head on to the indices. Okay, let's head on to the SMH, which is of course the semiconductor ETF. As you can see for the SMH, we're kind of just right back in this general range here, 385 along with our 405. Price ended up bouncing off the bottom of the range, and now we're just kind of right back in the middle, 395 here on the SMH. So coming into today, the levels that I do have here, and that's why you can see there's not really a clear direction on the semiconductors, is going to be our 395. If you do want to see a continued push towards the upside, as I mentioned, above our 395, or now we need to see it above our previous day highs, 398, for any sort of continued pushback towards the upside here. So it has to be above our previous day highs or a reclaim of that 396. If you do want to see some downside, break underneath our previous day lows, hold underneath for that continuation lower, or now it's of course going to be underneath that 392. So for the SMH, if we kind of just zoom out here, similar kind of thesis, we do have two gaps here on the charts, one from Wednesday of last week, and then we had another gap up from yesterday as well. So similar thing to the Qs, you can see this gap fill towards the downside underneath our previous day lows, or we can see this potential gap fill towards the upside if we can get above our previous day highs. If we go on to the hourly chart, we're kind of doing this in reverse, but if you're going on to the hourly chart, similar thing, I'm fairly neutral here in the past 20 to 40 sessions. Not really too much is going on. I'm still bullish on the higher time frames, but if we're strictly looking at the past 20 to 40 sessions, I'd say we're a little bit more neutral than anything. If we have a little bit of a longer outlook, of course, we're still bullish here on the SMH. But the key levels now I'd like to see really break above is, of course, going to be that 400 key psych. So this is what we have for the semiconductor ETF. Now let's head on to some tech names. As I mentioned, if you guys do have any charts or any tickers, you guys can now drop them in the chat. If you guys are enjoying this so far, sorry, I appreciate if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below here as well. Okay, let's first start off on Tesla. So Tesla here on the higher time frames, as you can see, still kind of maintaining this higher time frame pattern. We do have this downtrend break, which we still have not broken. I keep readjusting this, but it's still very much in line. If you were to just draw it, this general downtrend, you can see how many touches we've had, last week, kind of off this downtrend break. We've had 3 to 4 touches. If you do want to see some upside, we need a really strong break above this downtrend for any sort of continuation higher. Currently, we are seeing a couple rejections. So as you can see, we are in a fairly tight range here on Tesla. So now the break for continuation lower underneath that 380. Of course, if you want to see some upside, break above this trend line for a continuation higher. Let's go back on to the lower time frames. The key levels that we have coming into today here on Tesla is going to be that previous day highs, 400 key psych level, and then we can mark out a couple other key levels here as well. So coming into today, the key levels that I'm going to have marked out is going to be number 1, our 400 key psychological level. And then of course we have our low that we created here on Friday, 390. So coming into market open, if we do want to see some upside here on Tesla, another level that we can have marked out is of course going to be that previous day lows. We can drag this over, which is going to be that 395. Let's actually do that right now. We can drag this over up and towards our previous day lows, touch here, and then you can see multiple touches from its previous days as well. So for Tesla, let's just draw out our previous day lows, 390, along with our 400 key psych. If you do want to see some upside today here on Tesla, break above this 400 for this hold for a continuation higher. Of course, if we can reclaim back above our 400 key psych, hold above this level here as well, we can see our previous day highs, 404. This is what we have coming into market open, of course, on Tesla. Coming into today, if we do want to see some downside in the markets, we do have this gap fill towards the downside. So that is something to keep in mind that we created here yesterday. So that's why Tesla could gravitate a little bit lower here. Key level, of course, is going to be that previous day lows, 395. Only downside I do like today is off our previous day lows. Potential room down in towards that full gap fill, 391. Another possible scenario here as well, underneath our pre-market lows, hold underneath 390s are in play here as well. So that's what we have for Tesla coming into market open. As I mentioned, a lot of these names I am fairly neutral on based off the higher time frames. So until we can have a clear direction on the QQQ, we're just going to come into the markets with a soft bias, be open to playing both sides. Tesla, we end up trading this towards the upside yesterday, which was nice above our previous day highs, but you can see it didn't really last too long. That's what the overall market's been, right? We had some nice continuation intraday, but ultimately, right, higher time frame reversal. And as you can see, it didn't end up holding up and ended up breaking back later into the session. So if you do take any trades, make sure to scale along the ways until we can finally break outside this range, right? Don't hold as many trailers. If you are going to hold trailers, hold a smaller position. As for Nvidia, let's go on to the higher time frames on this one here as well. Not really too much to talk about. This one did have some news yesterday, and as you can see, immediately faded off key levels right back towards the downside. So for Nvidia, as I mentioned, we did have some news and end up rejecting right off a key level, just kind of right back inside of the middle of the range. So this just kind of goes to show you what type of market we've been in. As for the key levels that we have coming into today, what we have here is, of course, our last week's highs, 187. Other levels that we have marked out now as well is just going to be that 182, which just happens to be our low that we created here on Thursday of last week and essentially our previous day lows. So coming into today here on Nvidia, previous day lows along with our previous day highs. If you do want to see some upside, potential bounce play off our 182 reversal back towards the highs, or of course, right, some sort of opening drive play for a push up in towards that previous day highs is in play as well above our 187. As for Nvidia, might be a trickier open here just based off that news candle yesterday. So I'll just be a little bit more cautious coming into market open. If we do want to see some downside, of course, underneath our previous day lows, we can see some continuation down in towards that 180, which also happens to be right that big gap that we created here as well. So underneath that previous day lows, we can see that full gap fill towards the downside, down in towards our 180 here on Nvidia. As for AMD, let's go on to this ticker. Kind of just bring this out here as well. As for Nvidia, the key levels that we have, AMD, this one very similar to the rest of the names, just in a very tight range to start off March. As you can see, just right in between equilibrium here as well. So really not too much to talk about. Key levels that we do have marked out is of course going to be that 197. So 197 here is a very key level for AMD, essentially equilibrium on the higher time frames. If you do want to see some upside, reclaim back above our 197 is in play for continuation higher. Another possible scenario is, of course, above our previous day highs, hold for that continued push back towards the upside here as well. So these are the two scenarios that we have for AMD, but just to keep in mind, AMD plus the rest of the names, they're just ranging. So you can't expect too much here on the higher time frames, of course, until we break outside of this range. As for the lower time frames, if you do want to see some downside, underneath our 197, as I mentioned, is in play for continuation lower, or now, of course, underneath our previous day lows, 193 for continuation lower. All right, let's head on to Apple. Apple here, along with a few other tickers. Let's go on to the higher time frames. So as you can see here on the hourly chart, Apple has been in a little bit more of a downtrend compared to the rest of the indices. This one's pushing towards the downside. Key levels that we do have marked out is going to be that 255. If we do want to see this potential kind of downtrend break form on Apple, we're going to need to see the break above our 255. That's going to be the key level that we need to reclaim, break back above if we want to see any sort of continuation higher back up in towards our 262. So that's going to be the key level moving forward here on Apple. Mark out that previous day highs, along with our 255 here on the higher time frames that it needs to break above, hold if we want to see any sort of upside here in the markets. If we come up, reject off this level, we can be looking for a continuation lower. Another possible scenario now underneath that 252, we can see a push down in towards our 250 here as well. But as you can see, a little bit of buyers stepping in nicely here off that 250 on Apple, so fairly neutral coming to this one here as well. Google, very similar thesis, right? A lot more consolidation, fairly neutral on this ticker. To start off March, a lot of these names are doing the exact same thing, just a lot of consolidation. If we do want to see some upside above our 306 for a continuation higher, or of course now above our 310, hold above that level for a continued pushback towards the highs here as well. Pop and fade, we can see a push right back down in towards that 300, or underneath 300, we can see continuation lower. As you can see, a lot of these names, really not too much is going on the lower time frames. Even if you go on to the hourly chart, no clear trends here as well. So that just kind of goes to show you the type of price action we had to start off March. It's been very rangy, a lot of consolidation. So as I mentioned, until we can break outside this range, just be a little bit more cautious. As for Microsoft, I do like Microsoft here. Potential kind of higher time frame. Inverse head and shoulders is in play. As long as you can now maintain above our 390, that's going to be kind of this neckline here that I'd like to see buyers step in for this potential kind of pushback towards the upside here. So keep an eye out on Microsoft. Some of the levels I do have marked out on the hourly time frame is going to be that 402. So if we can break back above our 402, we can see this continue pushback towards the upside here, 406 and above. Of course, if we reject off our 402, we can see a push right back down in towards our 394 here as well. All right, let's go on to a couple more tickers. Meta, not really too much to say. This one recently broke the bottom of the range. Now we're kind of retesting the bottom, which is our 332. Little bit of reaction here yesterday. So now what I like to see is a reaction off our 630 still. If we reject, we can see continuation lower. Underneath our previous day lows, we can see this gap fill towards the downside here as well. Only way I'm interested in longs, of course, are going to be above our previous day highs, 632. Hold above that level for this continued push back up and towards this gap fill here. As for Amazon, this one, just zoom out here on the hourly time frame. Not really too much to kind of talk about here. Needs to break back above our 212 for any sort of continuation higher. On the hourly chart, if we just break underneath, right, we can just see a push right back down in between the middle of the range. As I mentioned, really not too much to talk about here this month so far. A lot of ranging price action, which is very good because that just means we are going to have a pretty big move once we finally do break outside this range. So after consolidation, of course, we have a big move either towards the upside or the downside. We're just waiting for that range break specifically on the higher time frames. As for Netflix, really not too much to say. After we had that nice pop later in February, kind of just right at this 96 key level. If we can break back above, we can see this nice push back up and towards 98 and 100. Ultimately, this one needs to see the reclaim if you do want to see a continuation higher. If we do reject off this level once again, potential room back down in towards our 94 key cycle level. Okay, so that's what we have for the major indices coming into market open. I'll go over a few other names here now as well before I do get ready for market open here. So if you guys do have any charts or any tickers, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below here as well. All right, let me grab some water. All right, let's go on to Palantir. Let's answer some questions here. Beginner small account 2K trader. Can you speak briefly about the 9 EMA and 21 crossover combined with the VWAP? Yeah, the 9 EMA and 21 are some of my favorite indicators. I personally don't use indicators as much, but it's just a good reference and it's good to have on your charts. That was actually the one of the first strategies I used was the 9 and 21 EMA. Sorry, but I use them more for right kind of confluences and looking for trends in the market. So if you're on the lower time frames, the 9 EMA on the 1 minute or even the 9 EMA on the 5 minute can be a great reference to how strong a ticker is on the day. As for Palantir, key levels that we have marked out is going to be this 156 along with our 150. So until we can break outside this range, really not too much to talk about. Currently, it's right in between the middle of the range, which happens to be our 152. So if you do want to see some upside here, just strictly based off the hourly chart, I would be a little bit more cautious in between these two levels. So I'd much rather be looking for, of course, longs above our 156 or the break underneath our 150 for shorts towards the downside. So these are the key levels that I have for Palantir. So until we can break above our 156 or break below that 150, be a little bit more hands off because it could very much well come up, reject off our 156, reversal trade back towards the downside, or if it came all the way back down and towards the lows, bounce off our 150, reverse right back into inside the middle of the range. So really in this market, expect more mean reversions and reversals until the market shows otherwise. Right? Until the market starts trending again, be more cautious of mean reversion slash reversals. That means you can go and trade, right? More pop and fades or dip and rips, or if you like trading continuations, you can be a little bit more hands off and just be more aggressive in your scaling if you are going to take continuation trades above and below our previous day highs. As for the rest of the tickers, as I mentioned, really not too much to kind of talk about here. A lot of these ones are just kind of pulling back with the overall indices. MU, this one, let's kind of touch up on this one really briefly. We do have earnings that is going to be on Wednesday after close. This one, nice push up and towards our all-time highs, which happens to be our 455. So as you can see here for MU, 455 is going to be that key level that we do have marked out. It didn't quite hit it yesterday, very close here, 455, but this is basically the exact level here on MU. As I mentioned, right, sellers can step in here off our 455, which, as you can see, this is the exact level you can see sellers stepped in off of 455 yesterday. A little bit of reaction off this level, and eventually we end up having that push right back down in towards our pre-market levels, which happen to be our 438. So with this kind of gap up here in the markets, if you do want to see some upside on MU, going to be very difficult because now we're gapping up into a key level of resistance. Longs are in play, of course, above our all-time highs, 455. But this for me is going to be very tricky, right? We're going to have a pretty big gap up coming to market open into a key level of resistance. This would be a very quick trade above your previous day highs. And you have to be very cautious. If it works right away, awesome. If it doesn't work, you would have to cut your position. But that's going to be above our 455. Price could very much well come up into that 455 reject. And you can see this potential reversal right back towards the downside, which would be that 446. So with this one, I'm just going to be cautious, most likely not going to trade this. As I mentioned, we do have earnings tomorrow after close, so the IV is for sure going to be elevated on this ticker. If we go back onto the daily time frame, as you can see right here, earnings tomorrow after close. This is going to be Wednesday. You much rather just be more patient unless you already have a position right earlier from March, right? If you have a position down here, or even you have a position off 400, right? You can kind of hold some trailers into earnings. But if you're looking to open brand new positions here at all-time highs, in my opinion, of course, it's not going to be worth it, and you just want to wait for after earnings. As for SNDK, very similar setup here. What I would like to see is that push up and towards our all-time highs here on the higher time frames. So keep an eye out on our 723 here for SNDK. As for the key levels that we do have marked out, what we have is our 695. Plus we have our all-time highs here. So we can just mark this out as a general area. If we do want to see some upside, really it's going to be the bounce play, of course, off our 796 for continuation higher. Or now, of course, it's going to be above our previous day highs hold. 720 for a push towards the upside here on SNDK. If we pop, reject, we can see a little bit of a mean reversion, but that's only going to be off our all-time highs. Besides that, really not too much else to talk about. The main day, of course, is going to be tomorrow with FOMC along with core PPI in the morning. So with the markets bouncing here coming into today, we're going to have a very small gap coming to market open. We're going to have a couple bigger gaps that we created over the weekend plus a Wednesday of last week. So fairly neutral coming into market open here. As I mentioned, I am going to be open and playing both sides on the SPY and the Qs off our previous day highs and previous day lows. So let's just keep an eye on the reaction that we have off both of these levels. As I mentioned, for long positions, it has to be above our previous day highs, 672. And the Qs above are 603. In this current market environment, we are a lot more open to playing reversals and mean reversions. So that is something to keep in mind because that's just kind of what the market's been. So if you do look for any sort of continuations, as I mentioned, right, just be a little bit more cautious and be more aggressive in your scaling. Besides that, right, really SPY and Qs, main watch is coming to market open. Tesla, let's keep an eye out on your previous day lows here, 395. As for the rest of the names, Nvidia had news yesterday, but fairly neutral coming to market open. AMD, really a lot of these names very neutral coming to market open here today. Not really looking to put on too much size pre FOMC, of course. So just going to be more cautious pre FOMC. And then, of course, tomorrow that is going to be the major red folder news event plus core PPI in the morning. So we'll do kind of a deep dive into what we're expecting coming into, of course, FOMC tomorrow. But yeah, that is going to be it for me today. I am going to get ready for market open here. So if you guys did enjoy that, appreciate if you guys drop a like and sub. If you guys haven't joined the free daily watch list, that of course is in the description below. And I will see you guys all tomorrow. All right, take care, everyone. Peace.